Alright, good morning year 11s. I'm going to record this video to just go over the cash flow statements for a trading business. Okay, now we've covered this before. We've covered this last semester in terms of cash flow statements for our service businesses. It is exactly the same kind of cash flow statement. Okay, there's no change to that. I'll go over just to make sure you know what you need to do in cash flow statements. Okay, now cash flow statements for trading firms, again, if you remember from last semester, cash flow statements, we classify the headings as operating activities, investing activities, and financing activities. Okay, it is the same format that we used last time. Okay, so remember, what do you mean by operating activities? Okay, so operating activities are the day-to-day activities of any business. Okay, investing activities, again, when we invest the money in a non-current asset. Okay, and financing activity is again putting in capital, taking out loans, stuff like that. Okay, so let's go have a look at some examples. Now, what are operating activities? So operating activities include all cash flows. Okay, remember, it's cash flows, whatever transaction we are doing that involves cash flow. Okay, when we are receiving money or we are paying the money. Okay, relating to the day-to-day trading operations of the business. Okay, now some of these activities will be for example, cash inflows will be cash sales. Okay, now credit sales are not a part of cash flow statement because there is no transaction of money. Okay, we are not receiving cash for the goods we have sold. It is credit sales. Okay, when we receive the money from accounts receivable, that's when we put in as cash inflows. Okay, receipts from accounts receivable. Okay, GST receipts. All right, so these are some of the inflows for operating activities. Okay, now some of the outflows would be cash purchases of inventory. Okay, payments to accounts payable. All right, expense payments, for example, electricity, wages, yeah, interest payment. All right, so any kind of expenses that that are incurred in the business, they are our outflow. Okay, so that is expense payments and GST payments as well. Okay, now remember, GST is not a part of income statement because it is actually not our income, but it is the cash inflow and outflow. So it is a part of your GST receipts and payments. So cash inflow and outflow, it is the day-to-day expense of your business. Okay, now let's look at investing activities. So investing activities includes all cash inflows and cash outflows relating to buying and selling of non-current assets. Okay, remember, when we are talking about investing activities, we are talking about non-current assets. Okay, now for example, some of the cash inflows for investing activities will be sale of a delivery van. Okay, so delivery van is your non-current asset. When you sell the delivery van, you're getting the money into your business. Okay, so that is cash inflow. Okay, sale of computers. Okay, computers again is a non-current asset. Okay, so when you sell computers, money is flowing into your business. Okay, sale of furniture, again furniture is a non-current asset. Now again, non-current assets are the assets that you use for more than a year. Okay, you're going to use delivery van for a longer period of time. Okay, computers, furniture, you use them for years and years, right? So they are our non-current assets. When you sell them, that is your cash inflow. All right, now what is going to be part of my cash outflows for investing activities is, again, so when I purchase any of these items, it could be cash outflow, sorry. Okay, shop fittings, purchase of shop fittings, purchase of furniture. Okay, purchase of office equipment, any computer. Okay, furniture, again printer. Okay, so these are my office equipment. When I purchase them, they are my cash outflows because I'm paying the money, right? Purchase of vehicle. Okay, again, when I buy a vehicle for business, I use it for few years, right? So that is the cash outflow of your business. All right, so these are some of the items that are related to investing activities. All right, now financing activities, let's look at what financing activities are. sorry. So financing activities covers cash flows relating to changes in the financial structure of the business. Okay, so whatever makes changes to the finances of your business is your financial activity. Okay, now again, the main areas of concern here are the owner's equity and also the loans taken by the business. Okay, so owner's equity is capital, okay, and loans taken out by business from a bank or any other source. Okay, now let's look at the examples of cash inflows for financing activities. So the first thing that comes to your mind is when the owner contributes capital into the business, when they inject some money into the business. Okay, it has to be cash only. Okay, we are talking about cash flow statement. Whatever cash owner is putting in, that is your cash inflow. If you see a transaction that owner contributes some of the inventory, that is not your cash inflow. Okay, because it is the physical item, it is not the cash. Okay, so cash flow statements, again, only the cash money that is coming into your business. Okay, loans taken out. So when you take out loans from bank, again, your business is receiving money. All right. Again, cash outflows, drawings of cash by the owner. Again, if he draws drawings, if he takes out some of the inventory, that is not a part of cash outflow. Okay, any cash that he's taking out from the business, that is the drawings, that is going to be part of the cash outflow. Okay, loan repayments. So again, loans taken out, when he repays the loan, that is again cash outflow because the money is flowing out of your business. Okay, hope this makes sense. So let's go on. Now this is the format of a report, so you should remember this from last semester, but if you don't, not to worry. I'll do one example with you as well. Okay, now you remember we did a pro forma like this. So cash flows from operating activities, again cash inflows are at the top, so cash sales, GST received. Okay, you write the amount here. Then cash purchases of inventory, again when you're making the payment, which is your cash outflow, it needs to be shown in a bracket. Okay, you should bracket this amount so you know that you need to add these items and then you need to subtract these items from that. Okay, so GST paid, again it is your cash outflow, so you put that in a bracket. So cash inflows and cash outflows from operating activities. Okay, then you get net cash provided by operating activities. Okay, so this is your $55,000. I will make two columns here, and this amount, final amount, will go in my next column. Okay, just to make it easier. Net cash provided by operating activities. Similarly, you'll do investing and financing. All the three items will be in the last column there. Okay, and then it makes it easier for you to actually solve the question. All right, now let's look at what it looks like. Okay, so once you do the operating activities, it is $55,000. From investing activities, you've got negative of $5,000. From financing activities, you've got positive of $10,000. Now after calculating all of these three activities, the balance, you will write net increase or decrease in cash held. Okay, now this is not in bracket, so this tells me that it is an increase. Okay, now increase, again what I'm doing here is $55,000 minus 5,000, okay, which is 50,000, and then adding $10,000, it's $60,000. Okay, now you will be given cash at the beginning and beginning of the period, so you're going to add that cash in your business as well. So cash held at the beginning of period, $6,000. So cash at the end of the period is going to be $66,000. Okay, so these are the things you need to remember. It's not that hard to do, but it is just you need to be mindful of what activity goes under what heading. Okay, which classification. Now this is pretty much end of the PowerPoint slides. I'll do another video doing a couple of questions with you. Thanks guys. Bye bye.